Welcome to speedearning.com. Today we are discussing the defensive buying and call put. Stock option is a very good instrument and you can trade very comfortably there if your approach is correct. So defensive buying is a very good approach. In that case, you will see the sector first whenever the market is opening. Suppose at 9:15 the market is opening, you just go and see the sector at 9:25, 9:30, 9:40, and then you can recognize two strong sectors and two weak sectors. So you will choose two strong stocks from the strong sectors and two weak stocks from the weak sector, place their call and put on the screen, and then what is to be done? You don't buy on CMP, current market price. Just place the buying order on lower price. That is the defensive buying. Actually you are playing on the back foot. So suppose any stocks call is running at suppose 10 rupees. So we suggest you to keep the buying at rupees 8 only. So whenever there is a correction in the market, Nifty is going down, so there are chances to get the trade activated. Okay, and the second thing, suppose put is running 2 rupees, the lot size is big and premium is lower, so put is running at 2 rupees. So we suggest you to put the buying order at 1.2 or 1.4 rupee, and whenever there is fall in the premium, fall in the price, your trade will be activated at very lower and defensive rate. In any fluctuation, if you are getting any call or put, then at such a defensive level, after 5 to 10 minutes, after 20 minutes, you will get a profit there. Suppose call a put is bought at 1.2 rupees and then it went to 1.1 and suddenly there was a reversal in the market, a very small reversal. So that put came to 1.4, 1.5, you just put the profit there because the lot size may be 5,000 and in 20-30 paisa you are getting 1,000 or 1,500 rupees, and that is quite enough. So there are very rare chances. Suppose you are placing the buying order in two calls, you are placing the buying order in two puts, and only the 25% chances are there to get the trade activated, but we need only one trade. If one trade is going on, then it's okay, we are going to complete our target there. Sometime if you are getting something at very good price, then suppose you bought the put at 1.2 and suddenly the market reversed, now the put is 1.8, so you are having the chance to put your stop loss. You can trail your stop loss there because you are already in 60 paisa profit, and if it is the lot size of 5,000 rupees, then you are gaining 3,000 rupees there. So in case of 3,000 rupees gain, you are having the power to keep a stop loss below 30 paisa. Means if you are trailing the stop loss by 30 paisa, even you are getting there 1,500 remaining profit. So that gives you the strength to remain there, and there is a big correction in the market. Suppose that the stock is going down by a large percentage, by a huge percentage, then there is the possibility that you are getting that put from 1.2 to 3 or 4. So there are chances that your put was costing you 7,000 rupees only and you are getting 25,000 or 22,000 out of that. So defensive buying is a very smart buying. Then what means defensive? Defensive means you are playing on the back foot, means you are buying on the lower price and selling on the higher price. What is the other method? If it is not defensive, then it is aggressive. Aggressive is the just opposite. You are buying on CMP. Suppose something is going upside, suppose call is going from 10, 11, 12, 13, so you are buying on 13. So that is very risky method. 3 out of 10 times you are getting 13, 14, 15, 16, but 7 out of 10 times there is a possibility that if you are buying it 13, it is just coming to 12 or 11.5, and that will create a big pressure, because you are having loss of 2000 or 3000 in just 5 minutes. It is showing you the losses, so that will disturb you totally. And we are talking about the good market conditions, means your price is coming back to the original price. But if market is not that good, then you will continue to lose amount from there, and you will have a very huge loss which cannot be recovered in coming many of the days. So defensive is a selective uh, method. Selective means you are placing the order in 4 stocks and there is a automatic selection, because one of them is coming only. So you're not accumulating so many positions which can create the losses, big losses. And you can change pending order if sectors are shuffling. If you're putting the defensive orders, suppose the stock is running 10 rupees and you are putting order at 8 rupees. So suppose after 5 minutes, 10 minutes, the sector has shuffled and the top 2 sectors went down to 5th or 6th position, and 4th and 5th sectors are coming to the top position. So there may be shuffling. So you are having the chance to cancel that order because it is not activated yet. So from it is running on 9, you place the buy order at 8 rupees. So you just cancel that order at 9 and select the more appropriate sector and stock for the coming movement. So that is the benefit of defensive buying in call and put, and that will give you good profits always. Thank you very much. Bye.